All right, party people. What's going on? This is your man Griff. Do a quick video here just to talk to y'all about the mortgage interest rates. Wonderful friend sent me some information about the worries that people have concerning the mortgage interest rates. They're going up and everything. And I thought about been thinking about doing this video, but when she sent me some information, I said, you know what, I'm gonna go on and do it. Um, Might as well, just to share some information and to give you some food for thought. Um, there's information out there about mortgage companies shutting down, reducing staff because they're not getting the work in. And they have the same dilemma that we have. If we haven't built the relations during this time of feast, when the famine comes, you starve. So if you build the proper relations, coordinating and working with people. And that's why I keep sharing with y'all the importance of just getting out there and doing the work. Yes, there are orders that are probably very, very low. And if you think about it from a business standpoint, if there's a company that had tons of money coming in, a lot of revenue from all these different clients they had, and then those clients dried up. So let's say they're dealing with brokers. If there's a mortgage broker who no longer is getting the deals or can no longer provide the deals that they once were because interest rates went up, then everybody has to go to the traditional bank. And then the traditional bank says, here's a requirement, and you can't get a loan. You get what I'm saying? So those mortgage brokers, those non traditional lenders may be may be falling out of the play, might be falling out of play, which means if a mortgage company or a lender, I mean, a mortgage company or escrow company actually put all of their eggs into that basket of using non-traditional lenders, you see what I'm saying? So things could be a little sketchy there, and then they lose money, and then next thing you know, you're losing money. So that could be going on. That might be what's going on for some of these companies and other things. Okay. This is just my speculation of what is going on based on my experience as a business owner and how things typically tend to run. Okay. I'm just sharing that with you. All right. Whew. Okay. So, what I want to show y'all is a little bit of the history of the mortgage rate. Okay. Um, and let's bring this up here. So this is Freddie Mac. You got Fannie Mae, Freddie Mac. Don't know who the heck they are. Don't know if they're related and all of that. But you have Fannie Mae, and Freddie Mac. Freddie is saying, here's what our current interest rates are. Okay. And I'm gonna have the link in the description for you. And you can go look at it yourself. So right now for January, February, March of 2022, these were these are the interest rates. Okay. And as you go down here, it tells you what the average for each year it has been. So as you see here, for when I started in 2018, the interest rates in July of 2018 was 4.53, then 3.7, 3.02, then 2.87. Who knows what it's going to be for July of this year? But one of the things that I want y'all to see as I scroll through here, and sorry that it's going so fast, but when you get down here in the 80s, 1983 to 87, this 5 year span of time, the interest rates were 13, 12, 14, 11%, 13, 13, 12, 10. So these interest rates during that 5 year period was between 13, 10% and 13 as the low point. Low point 10.21, the high point 13.24. So the interest rates were not cheap. And then when you get down into the late 70s, early 80s, as we see, the interest rates were high, as high as 18.45. So I'm trying to get you to see that a 5% interest rate is not that bad. It really, really isn't. So if you are a homeowner or a proposed homeowner and you are looking at this video, interest rates at 5% is not that bad as compared historically to what they were. And in my opinion, what I'm seeing are interest rates that pretty much are at what it was when I first started in this business. It wasn't that, I mean, they weren't that low. It wasn't low as what we saw a couple of years ago or a year ago. And it wasn't as high as what we saw 2 or 3 years prior to 2018. 3%, 4%. That was the average interest rate running back and forth between there. And people was refinancing. They was buying homes anyway. And I was doing probably 12 or 15. I was part-time at the time, but I was still doing the work. So are interest rates really sky high to a point where nobody's going to want to refinance? There are people out there who have the money. They have the money to refinance. And if they can qualify for it, because you can have the money, but then you also got to be able to qualify for the lender requirements. So if the lender has the right, has these requirements and the borrower meets those requirements, what reason does the lender have to not give them the money unless they're doing some type of discriminatory or practice where they're discriminating against a person for a wide variety of reasons, which there are laws against that. So ideally, if somebody qualifies for a loan, has the money necessary to put down on the house or pay points, and we're going to go over points in a second, then there's no legitimate reason for them not to get the loan. It's that simple. So one of the things that and as y'all saw, let me bring this back up for you. As you see here, this column about buying points. Okay. And I believe this is the maximum amount of points that a person could buy at that time. I think I didn't do a whole lot of research on this for the point stuff, but or that might be using that amount of points. So to understand points, basically points is a way that you can buy down the interest rate. You can pay a little bit more money upfront to get a lower interest rate and save money over time. And depending on how many points you purchase, you can save a considerable amount of money. Now, points do not equal 1%, and like a percent of off the interest rate. Okay. And let me throw this disclaimer out here. I'm not a mortgage officer. I'm just sharing this as educational purposes only, just information to help you understand some things. So do not think that I'm a mortgage officer. Do your own research. I am not a loan officer or any of that, escrow, anything. I'm just a guy who does some research and just sharing information. So the 1 point equals 1% of the loan. Doesn't mean that if you buy 1 point and your interest rate will go from 4% to 3%. That doesn't mean that. It does not mean that at all. As you see here, it says 1 point equals 1% of the mortgage, meaning for every $1,000, you pay $1,000 for every $100,000 you buy that you are spending. So if you have a if you have $100,000 house, you want to buy a point, that's going to cost you 1%, which will equal $1,000. So in the example that they give here, and this here payments is just the principal and interest only. If you have 0 points and your interest rate is a 4.5, you have no costs for buying points. Your mortgage and principal and interest payment is over $1,000, and you have no savings on that. You're not saving any money off that loan over the interest over the lifetime of the loan. If you buy 1 point, which in this case, a $200,000 home, which would equal $2,000, $200,000 home, you're paying 2%. or you're buying 1% of the loan, which in this case would be $2,000. You will be paying $2,000 into it. That's how much it's going to cost you to buy 1 point. You're saving over $10,000. If you buy 2 points, which would equate to $4,000, you're saving $21,000, over $21,000 off the interest that you would be paying over the life of the loan. So that's a significant amount of money coming back to you. And as I said down here, this is a this is just an example of the principal and interest only. This is the taxes and insurance are not included in this example. I don't know why my throat all scratchy tonight. I got the air conditioner on, maybe that's why. All right. Like I said, we're not going to be here too long. So, and the links for these here sites will be in the description below. So to just bring it in, the mortgage people are going to try to do their best to find a way to get people the money that they want. Bottom line, somebody wants to borrow $200,000 to buy a home, they're going to do what they can. If the person has their act together, the lender has their act together, then we'll be there to close. The question is, are you going to be ready to close when they call on you? Have you been doing what you needed to do in the past so that a company will feel comfortable in calling on you? If you have, great. If you haven't, I don't know. You might not be getting too many phone calls. Now, has things slowed down? Yes, things are slower. I can't say they're the slowest I've ever seen because this is my first time experiencing this. But when I did some number checking last month compared to this month, meaning last month, March of 2022, compared to April of 2022, things are slower than what I've experienced in the past. I haven't looked at how slow they were for us January and February, but I do my analysis of how my month is going, and I break it into two parts: the first through the 15th, 16th through the end of the month. My goal is to bring in 4 grand a month. I mean, 4 grand from the first through the 15th, and then try to pull in another two by the end of the month. So the question is, where am I at between the first and the 15th? And as of last month, so for last month, I had 20 orders, March of 2022, from between the 1st and the 15th of March 2022. I had 20 orders, and I brought in during that time $1,995. $5 off of 2 grand. So in other words, just a little less than $1,000 a week. This month, which feels slower than last month, I've done 22 signings, or will do 22 signings by the 15th, because at the recording of this video, it's the 13th at 12:30 in the morning. So this month so far, for April 2022, I have 22 closings, either that have been done or will be done, combined 22 closings, and the revenue that I'm bringing in from that is $2,305. So more revenue and two more signings than last month, which is $310 over what I did last month for that same duration, the first 15 days. Over about $1,695 short of where I would like to be for the same time period, which is 4 grand. Understand? However, from the 16th through the 30th of last month, or the end of the month, which I forgot how many days, but from the 16th to the end of the month of March 2022, I did 30 signings. So I'm very hopeful that starting from the 16th to the end of the month, that I can do another 30 signings. And the question is, do I have the supplies and the equipment and everything to do that? Yes. I just bought 3 more cases of paper. So I got 5 cases of letter. I got 2.5 cases of legal. I'm about to buy some more legal, probably 2 more cases just to have. And I got plenty of toner. I got drums. I got everything set and ready to go for whatever may come my way. So I'm very optimistic that I can pull in another 50 plus signings this month. My goals my goals have shifted a little. I still have my eye on the 60 signings a month, the $6,000 a month, but I recognize that it may not all come through. The $6,000 may not all come through the notary. It may be a combination of the notary and the house inspections. And this is what you have to recognize, people, that you have to make the necessary adjustment for what you're faced with. And that's the what's the best word to say? That is the foundation, that is the core, or that's what a entrepreneur should do. It's about how you handle the ups and downs. They come. They've been telling us some of these trainers have been telling us, like Bill Soroka and Laura Brewer, and even I believe Carol Ray before she passed was telling us things change, things shift. 2008. Then in the news, they've been telling us things change, things shift, but nobody listened to them, and nobody got themselves prepared. So now people are trying to scramble, trying to build relationships, and these companies are like, "Hey, hey, 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 you had your shot. You had your shot. You didn't care too much about me. We asked you to scan backs. You said no. We asked you to drop off on time. You said no. We asked you this. You said no. You went and did this stuff, which we told you not to do, and you did it anyway. We said don't double side print. You did it anyway. We said don't email documents. You did it anyway." You know what I'm saying? So there's a lot that people have done that has broken the relationship. I put forth every effort to build the relationship and to make sure that I am being everything that they need me to be, so that when the orders come in, they can send them to me. That's what I've been doing. And that's what I've been encouraging you to do. And let's just be honest, truth be told, many of you have just completely ignored what I've said, as well as others who have said these things, to the point where you're ready to quit the business. And I understand. And I can't say don't. You're going to have to do what you feel is best for you. But what I will say is, whatever your next endeavor is, whether this business or another, if you come back into this business or continue to stay in this business or go into another business, you got to remember the principles, build the relationships, get out there and do the work. Stop trying to be elitist and fuss and whine about um this order and that order. Be mindful of the information or the advice that you're getting. Is the advice you're getting an elitist mindset attitude of, I'm better than you, I'm better than all of you scrubs out here, and I'm just going to sit back on my high tower and just wait for the pinnacle of orders to come in? Or you're going to get out there and grind. People call themselves hustlers and say, I'm on my grind, but then they don't actually go out and do the work. They're not out there grinding and taking the work that's available to them, even if it's not necessarily the dollar amount you want. But you go out there and you're grinding and you make that money happen. That's a decision you're going to have to make going forward. So I'm I don't know what else to say, to be honest. I really, really don't. I don't know what else to say except stand firm, stand strong. You're gonna have to make up your mind on what you're gonna do and how you're gonna do it, and then go out there and execute it. Other than that, I can't think of anything else to share with y'all except, just be mindful of who you listen to and evaluate the information that you've gotten, and probably have to get some new information. But other than that, no matter what, Griff here, Griff is here for you, and I'm gonna help you out as best I can. Y'all have